Do you have any expectations from the Fed today?
Not really. I mean, I'm sure Powell's going to try to temper expectations. I don't think he wants people running away with multiple rate cuts. So, I don't think he's going to be exceptionally hawkish, but I don't think he's going to be announcing cuts anytime soon. So,
Okay.
my guess is it'll be kind of business as usual. And in his press conference, he'll try to he'll talk about the balance risks and saying we still aren't ready to cut, and we think we still have to be pretty prudent here.
Okay, David, a lot of people before we get to the markets are talking about, I believe it's M3, the contraction of it being as great as it was in the 30s. Does that mean anything to you?
Well, two things. One, it does mean something. I'm a monetarist basically at heart, so it means something. But I think you have to realize where you're coming from on that, and whether it's M3 or M2. Um, we had that 5 trillion pumped in back in 2021, and
Right.
so the growth rate is what everybody's taken aback by. It's gone into negative territory, and it's fallen from very high growth to negative growth. And you see it on the chart, and you go, "Oh my God, this is worse than anything
Yeah.
we've had since the 30s." But you have to remember that we're still looking at a balance sheet that is way above anything it's ever been before. We're I don't know exactly where the Fed balance sheet is today, but it's I think down under eight trillion, maybe some slightly. But it came up from you know it was less than a trillion back in 2008, and it came up from 3.5 trillion in 2020. So
Yeah.
you still have a lot of money sloshing around. Although at the margin they are tightening aggressively, and as you know, I'm calling for a global bust next year, and that's part of the reason is because I think
Yeah.
they do not understand that with a lag, what they're doing is going to create havoc. But
Okay.
but in the short run, I think people are getting overly excited about a growth rate that's gone
Okay.
negative.
All right. You got a trillion here, a trillion there, a trillion here. What's the difference, right? I mean,
Right.
what a quadrillion. I don't know what it's going to end up, but Dave, why don't we move to the S&Ps? And I know it's probably too early for you to do a victory lap, but considering the November we've had and where we are now, and I gleaned that you have actually revised upside targets in the S&P.
Well, my target has been for many, many months 6,000 to 7,000 at the top.
Okay. Okay.
I'm talking, I guess, more about 7,000 these days. So you can kind of read in, between the lines and say maybe he's getting a little bit more aggressive on his upside. But basically, I've always felt that 7,000 was realistic. I just felt it was a long way to go, and I wasn't sure we'd get there. I guess I'm more confident in saying I think the 7,000 target may be reached. So
Okay.
I'll keep my range of 6 to 7,000, but I think it's really looking more and more like it's going to be the upper end of that range.
Okay. So even the conservative side side of your range, 6,000. Like I say, Dave, you're the most bullish long-term bear I've ever talked to on the street.
Yeah, and I think
So,
when we get done today, you're going to say that that's even more the case.
all
I,
right.
I I
All right.
really do. I really do think we could see. Certainly, I think there's a decent chance we're going to see new highs, all-time highs this year.
Dave, so, what I want to know is, even the bulls on Wall Street, forget the bears because they never got what you were talking about. But even the bulls, 5,400, 5,300. Tom Lee, what a guy who stayed bullish, always bullish, doesn't come close to your targets and the things that you're looking for. What aren't they seeing that you see?
Yeah, it's two things. One, from a technical standpoint, I think we are. If you take a look at, we basically take a look at, just as an aside, take a look at uh, X, XBD, the stock brokers.
Okay.
And you will see as bullish a chart as I have seen in a long time. And it's not that different from the S&P, but base or the semis or what have you. You're looking at many groups that are either breaking out or look like they're going to break out
There it is.
in coming months. I mean, that's a group that doesn't
Yeah.
tell me that we're heading for 3,000 or 4,000.
Yeah, the financials have really come to life since the bonds bottom,
Yeah,
Dave.
and
That really took the pressure off them.
if you stretch this chart out, look at a 10-year chart on this.
Well, there you go. You're going back to '07 back here, the
Yep,
bear market bottom.
yep. I
Yes.
mean,
So,
that is
so this is what technicians call this the handle of cup and handle that it's coming
yeah,
out of.
sure, or certainly a rising wedge that looks very bullish. So I think if the brokers are that bullish, how can the stock market be in a bear market or heading rolling over soon?
What a
Um,
great point.
you
Yeah,
know,
you really never have a bear market without the financials being under pressure, do you?
right, and that's exactly right. And frankly, the financials which have lagged the market until recently are picking up speed, as you noted a minute ago. And I think whether you look at even regional banks,
Yeah.
certainly the banks in general, and other financials, they're all looking to me like they're going on to all-time highs and significant all-time highs. So, this is a laggard group that's doing that. You look
Yeah.
at, industrials, they're at their highs all time. You look at obviously the semis are at all-time highs. There's an
Yes.
awful lot of groups that really argue against the narrative that's been out there for a long time that this is just a bear market rally.
But how do you get
At the
to
worst, at the best, it's going to be a double top. That's where people have been.
yeah, but how do you get to your targets of 7,000 compared to bulls that look at 5,400? What are you seeing that they're not?
Okay, sure. Part of it is a thesis. The thesis is that we are late in a secular bull market, and that the move we had in 2020, 2021 is going to be exceeded in both its steepness and its dimension. So you're going to have a bigger rally than 2020 and 2021 to cap a 41-year secular bull market. It looks to me like you're going to go through what I call a parabolic final blow off into a top. And
Okay.
so I think people are underestimating that. Obviously, from a how do we get there standpoint, my thesis is that you have had in the last couple years such a herd effect, all moving to a bearish positioning, all feeling very confident that this thing's at a top or near a top, and why do I want to be aggressive there? And positioning negative, you had a bear market last year, and
Yeah.
people just doubled up on that bearishness, and they've fought the rally that we've had since October 2022 all the way up as saw it as a bear market rally, kept thinking every new move up was a top and that it was going to roll over. And so my point is that there's still an awful lot of skepticism underlying this market. There's still an awful lot of investors, and particularly institutional investors, that are positioned defensively. And we're about to break out to new highs. What
Yeah.
I think you're going to see is a concentrated move from defensive to offensive, meaning that it could what might transpire normally over the course of a year in a bull market, I think is going to happen in much shorter period of time. And what that means is you get a buying stampede where you have basically a lot of illiquidity because everybody's on one side of the market, which is buying,